Yesterday, we saw that new home sales were the best in nearly a decade. So I think we can safely say the housing market's back on firm footing, especially after that great quarterly report from Toll. That's why tonight I want to talk about Ellie Mae, E-L-L-I. That's a software-as-a-service company that helps lenders streamline and even automate parts of the mortgage origination process. Ellie Mae is the only player in the business with a one-stop-shop mortgage solution that helps handle everything from figuring out if someone's worth lending to complying with so many of these new federal and state regulations, to collecting mortgage payments from borrowers down the line. With their software, everything mortgage-related gets put into a single platform, and no other financial technology company has anything like that. Now, given the recovery in the housing market, Ellie Mae has been on fire. The company reported a terrific beat and raised quarter at the end of July, and its stock has rocketed up roughly 60% year to date. How can this fast-growing cloud-based software company continue its fabulous march higher? Let's take a closer look with Jonathan Corr. He's the president and CEO of Ellie Mae. Learn more about his company and where it's headed. Mr. Corr, welcome to Mad Money.
Thanks, Jim. It's great to be here.
All right, sir, because it's your first time, although I know that one of my associates spent a lot of time watching your company who works with my charitable trust, I need to be able to get people to understand what you do. And maybe you can provide me and our viewers with an overview of why banks use Ellie Mae instead of doing it themselves.
Terrific question, Jim. So what we do is we try to enable the process all the way from the borrower taking that initial loan application, working through that entire process, and ultimately getting that loan to the end of that underwriting process, that funding process, and deliver it to the investor. It's an incredibly complex process. Historically, lots of paper involved, lots of people, a lot of inefficiency, a lot of disconnected systems, and then on top of that, being done in a very tight time frame, high quality demands, and regulation that has really cranked up tremendously since the Dodd-Frank Act and the CFPB went into play. And what we do is we automate that entire process. We go off and we sell a software as a service solution that goes from end to end, that gives these lenders tremendous insight in terms of getting that loan done for the consumer. And it's allowed us to grow very rapidly over the last 5 years. We've grown about 35% compound annual growth rate, best-in-class margins, and we're still really in the early part of the game. First, we're in the second or third inning.
Our viewers often like to use something, buy shares in something they've used. Is it possible that our viewers have seen a decline in the number of days it takes between they buy and when they close because of Ellie Mae software?
Absolutely. I mean, we actually see through our system, and we publish a monthly report where we're showing the amount of time it takes to close a loan. And our lenders do it much more efficiently than the broader marketplace. And that's because what we're really trying to do is to squeeze out all that inefficiency and enable the lender to provide a great process for the consumer, but still deal with all that regulatory pressure and cost on the back end, which has been enormous over the last 5 or 6 years and created a great opportunity for Ellie Mae to come in and make it a better process.
When I first heard about your company, I said, well, wait a second. Wells Fargo is the biggest. They must be able to do it themselves. So then I looked into it. You seem to be Wells Fargo's guy. I mean, so even the biggest banks can't develop this on their own?
We do some things for Wells Fargo, but this is a complex operation. There is a lot of different things going on. And, lenders, they need to do what they do best, which is go off and do loans for consumers, provide great service, deal with all the complexities there. But from a technology standpoint, that's not what lenders or any business wants to do. They want to be able to depend on a technology provider that has incredible insight to the regulatory environment and that can do that work for them as their partner. And, Ellie Mae has been that partner. We have over 1,700 lenders with 200,000 users on our platform. We connect them to thousands of service providers, all the credit agencies and appraisers and flood companies and Fannie Mae and Freddie Mac, and facilitate millions of transactions across that platform each month, Jim. Okay. And it's exciting. It's this incredible network.
All right. Now, if I'm trying to gauge your business, should I be looking at new seats that you get, Should I be worried that there's not a lot of housing for sale, and so therefore transactions may decline? Do I want to see a housing boom to get leverage from Ellie Mae, or is it all a bit of these?
Well, you know, fundamentally, there's a secular shift going on. And the thing that has been driving our growth over the last 5 or 6 years has been this shift to embracing software as a service, this pressure to automate driven by demands for quality and dealing with all the regulatory change that's come out of the Dodd-Frank Act. That's the underlying driver of growth. You know, in the last 5 years, the market has only been up twice, and yet we've grown at least 26% in each of those years. Now, volume can have an effect on us, and you know, as we look ahead, there's tremendous leverage in our model because we provide both a seat pricing for our customers, so a per user per month, just like other software service models, but then we share with our customers in the upside. We call it success-based pricing. So as we look into the second half of this decade, I mean, even we look at the report that came out yesterday, you know, home purchases are positioned well. New household formation is positioned well for the foreseeable future, and we're gonna benefit from that as well.
Well, it is just a fabulous story. You've done incredibly well, and thank you for coming on Mad Money. Welcome to introducing you to our world. Thank you, Jonathan Kors, CEO of Ellie Mae. Good to see you, sir.
Thanks a lot, Jim. I appreciate the time.
This is good company. What can I say? And this is the right time for this kind of company. I say stick with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.